morning. It's June the 23rd. It's a Friday. Thank God it's Friday. Welcome to Friday Business here on Business Morning. I'm Ini John Mekwa, and we get straight into the business of the day, beginning with oil prices. So we start by telling you that oil futures fell about 4% on Thursday as a bigger than expected Bank of England rate hike prompted worries about the economy and fuel demand that outweighed support from a surprise draw in the United States oil and supplies. Brent futures settled down $2.98 to $74.14 a barrel. U.S. West Texas Intermediate crude futures was down $3.02 at $69.51 a barrel. The benchmarks erased gains from the previous session, during which U.S. corn and soybean prices raced to multi-month highs, raising expectations that crop shortfalls could lower biofuels blending and increase oil demand. The Bank of England raised interest rates by a bigger than expected 0.5 percentage point to fight stubborn inflation. It was the central bank's 13th straight rate hike. Higher interest rates could slow economic growth and reduce oil demand. In the grain space, Chicago corn futures edged lower on Friday as traders booked profits after a recent rally over concerns of dry conditions in the key growing areas of the United States Midwest, although they were still poised to post weekly gains. Wheat and soybeans also fell marginally, but wheat was still headed for a weekly gain, while soybeans were set to post a weekly drop. Corn futures were down 1.9% at $6.09 for a quarter of a bushel after hitting a more than 2-month high on Wednesday. The most active soybean contract on the Chicago Board of Trade was down 1.5% at $13.20 a bushel, while wheat futures gave up 0.7% at $7.47 for a quarter of a bushel after hitting the highest since late February on Wednesday. Back to Nigeria now, where that foreign exchange rate unification has gotten a lot of investors excited, a lot of sectors excited. But this report put together by Laddie Williams tells us some of the other implications. Some may not sound so exciting, at least in the short run.
Must work towards a unified exchange rate.
And just about 3 weeks after, 4 FX windows were collapsed by the Central Bank of Nigeria, ending many years of running multiple windows to cushion the impact of the fall of global oil prices in 2015. In the global oil market, prices dropped as low as $44 per barrel, squeezing oil revenue to the Nigerian government. Fast forward to June 14, 2023, the Central Bank of Nigeria officially announced the collapse of multiple exchange regime. But economists say it's not possible to have a perfect float.
The rate of exchange you have for your dollars at Heathrow Airport is different from the rate of exchange you get for your dollars when you get to Oxford Street and when you get to the bank. As long as the difference between one and the other is not beyond 2 or 3%, that's what we call the comfort zone. There's no problem. There's nothing like a unified, perfect market in the world.
According to economic experts, the main issue with Nigeria's forex market is supply of dollars, as Nigeria obviously does not print dollars, and this is also echoed by the BDC operator.
As an operator, how does it affect you? One is the inclusion. If you look at it, PTA, medical bills, and personal traveling allowance, these are urgent transactions of the public. And they said it should still be met by the banks. We are not competitors to the bank. We are only complementary because of our convenience.
With big changes like FX window unification, volatility may be expected, and recently reports show the official rate of the Naira fell below the parallel market rate. But when can we expect some form of stability?
With the spot rates in Nigeria, historically, it's always been a bandwagon effect. And the reason why it's even going to be more epic this time around is because the government has finally gone off the purse strings of maintaining an official peg that I call the friends and family rates. That was not working because there was no liquidity to supply it. Eventually, the real market or the real rates for FX in Nigeria will be the investor and exporter dealer window rate. The spot rate is only going to align with that investor and exporter dealer window rate.
And talking about volatility, Nigeria's local bourse has seen big moves to the upside on the back of policies by the Tinubu administration. And at a time foreign investor participation is really low, what impact will the FX rate unification have on foreign portfolio investment and foreign direct investment?
But what is likely to happen now is that a lot of foreign investors, are showing interest. So you find even domestic investors positioning in anticipation of that. The big banks, have proved over time to be the major vehicle of capital importation into the country.
According to economic experts, unification of Nigeria's FX market is a step in the right direction. Now, government must encourage production to boost export earnings, which will in turn strengthen the Naira. Laddie Williams, reporting for Channels Television News.
All right, thank you so much, Laddie, for that report. Now, we're talking about AfCFTA, and this has been in existence for 2 years now, since January 1st, 2021. Recently, at the AfCFTA meeting that was held in Ghana, we did see a lot of manufacturers saying that AfCFTA has not worked. So when we delve into this, we see a lot of logistics challenges, payment system across borders being at the top of this. But it seems there's a solution somewhere around us, and that's what the Senior Vice President of SITA at Borders, Mr. Jeremy Springall, joins us to discuss. Mr. Springall, good morning. Thank you for your time this morning. So we see manufacturers across the continent saying that AfCFTA has not worked. What would you say are the high points of, the deterring factors of AfCFTA on the continent?
Yeah, so I think the opportunity that the Africa Free Trade Area presents is immense, and they're right to be concerned. And one of the big challenges is at the border. So how do we enable that free movement of goods across borders in the most effective way? And one of the big challenges that governments face is the fact that they need to protect their national borders from security threats and international crime, whilst at the same time look for those opportunities for national prosperity by opening up their borders to promote trade and travel into their countries. And the way most governments are now looking to achieve that is through a digital transformation of their border.
So what does transformation of border look like?
So if you think of maybe the last time you traveled across a border, there's a lot of challenges. So typically either goods or individuals will need to queue at the border to be able to cross. There are a lot of bottlenecks and delays in the process. And a lot of that manual processing is a big challenge. And one important way to address that is to move to more of a model where you pre-clear those goods and people from traveling into your country. And that enables you to, on arrival, if you've already pre-cleared them, risk assessed them, all you need to do on their arrival is confirm their identity. And you can do that using digital technologies. So if you're an individual crossing the border, you can use digital identities and biometrics, so your face, to cross the border.
So a lot of countries will tell you already, especially at a time like this of a high inflation and the hike in interest rates squeezing economic activities, capital expenditures such as that may not be prioritized. What would you say to that?
Well, I think there's many models to sort of fund moving towards more of a digital border. The opportunity that it presents is significant to countries, and it's significant to the people that are transferring those goods, importing those goods into the country as well. So there's many sort of models to address that and fund these sort of solutions going forward. The opportunity, I think, as I said, is all equally easier in some ways with Africa. Some of the challenges that governments facing around the world around some of the legacy systems that they have in place, those same obstacles aren't in place here. So moving towards a digital way of managing your border actually, in some ways, is very much easier here. And many countries are already implementing and investing in a lot of this technology. So as I mentioned, for people to travel across borders, one of the key elements of that is digital identities. And many African countries are already investing in a national digital identity scheme that could be used for international travel, particularly regional travel.
Yeah, but you know, there's this issue of protecting your economy. You don't want your country, like here in Nigeria, we do talk a whole lot about Nigeria not being a dumping ground, you know, for other countries. And so there's that on the one hand. There's also the issue of trust. Can I trust my neighbor, you know, by opening up and not trust and not see my neighbor take advantage of my weakness that he has seen and kill my domestic industry, you know, and take over our local industry? You know, these are some of the sentimental and non-sentimental issues that seems to be impeding the success of AfCFTA 2 years after.
Yeah, so one of the key things that governments really need to build that trust is really around data. You know, how do they understand what goods are traveling across borders? How do they really gain trust that the right tariffs are being paid where they are due? As I said, a lot of that is required from a data point of view. And that's where the digital border really comes into play, that data can be used to really ensure that the rules are being adhered to, that only the goods that are agreed between those countries are traveling across, and you know that over time that trust will build up. I think equally there's a trust in really understanding the goods that are being transferred across. So how do you really understand that entire supply chain? How do you trust all of the different elements of that supply chain to make sure that what is being imported is in line with the rules of that country? So data is really key to that, and that's a key part of that digital border.
And then there's also the challenge of payment system. I mean, I remember some time ago I did travel to a neighboring country from Nigeria, and just paying for the hotel was a very big deal. Card is recognized, it's not recognized, transfer, you know, and change to dollars and things like that. And so there's this, you know, PAPS that is supposed to be African payment system across border. What elements do you think can make this efficient?
So again, you know, if you understand what goods are being travelled across the border in advance, or if you as an individual is travelling across in advance, then those payment structures can be better understood and put in place. So, you know, again, without that data to really understand, you know, the volume of goods being put in place and therefore the payment requirements that are there, it's very difficult. So again, it comes back to that data and those agreements between governments to enable those payments in the most effective way. So I think that's a very different sort of issue than some of the challenges at the border itself. I think that's another major issue that is impacting the trade area itself.
All right, so what about the issue of comparative advantage? How do we get countries to stick to their areas of comparative advantage?
A big, you know, a big question. I think there needs to be dialogue between governments to ensure that everyone is benefiting from the free trade area, and it's. I think that dialogue is really key. There's many organisations involved at the border, and You've got immigration, you've got customs, you've got health and agriculture. There's all sorts of different challenges that need to be agreed between those different stakeholders, and that looking at those advantages that can be utilised as part of the entire free trade area is really key as part of that.
All right. Thank you so much, Mr. Jeremy Springall, Senior Vice President of CETA at Borders. Thank you so much for sharing these tips with us. We do hope the African countries will adopt some of this and we'll see a better implementation of AfCFTA in the nearest future. Thank you and enjoy the rest of your day.
Thank you.
All right, we'll take a break now, but even during that break, MTN Foundation doing some work there, and they want you to know about it.
It's the commissioning of the remodeled science laboratories at the renowned all-girls secondary school in Lagos, Queen's College. MTN Foundation management invited guests as well as the school management, and the students gather in the school hall for the ceremony. While Queen's College is known to have maintained a track record of long-lasting academic excellence over the years, the foundation says it is one of the criteria it considered in investing in the project for the school.
It is in recognition of the fulfillment of the criteria that we set up. It's also in recognition of the fact that you, as Queen's College, have on the board a representative who is articulate, strategic, and clear in our presentation.
The development of our youth has been demonstrated by this significant investment in the refurbishment and the equipping of these laboratories. The impact of this investment will go beyond the walls of this institution, as it will enable students to acquire the practical knowledge and skills they need to succeed in the children's fields.
To the delight of the guests, the students performed some cultural dances.
We stand proud and honored to commission the MTN Foundation Science and Technology Laboratory project. This project would provide a platform for young science and technology enthusiasts to hone their skills, aspire and achieve excellence that Lagos State and MTN indeed represent.
It's now time for the official launch of the laboratories. And the chairman of the foundation leads others as they tour the remodeled facilities.
MTN is supporting education because I believe education is actually at the core of what should be our major priority as a country. The effects may not be immediate. In the next 10, 15, 20 years is when you see the effects. So some of what you see today has to do with what happened 20, 30 years back. In terms of what it does to education as a whole, it's fantastic.
MTN Foundation says it is committed to partnering with public and credible private organizations to execute sustainable projects in health education and economic empowerment in Nigeria.
Welcome back. Still watching Business Morning here on Channels Television. At the 12th WTO Ministerial Conference, which was in Geneva, Switzerland, in June last year, Nigeria joined WTO to adopt the agreement on fisheries subsidies after over 20 years of negotiations, which Nigeria actively participated. The agreement sets new global rules to curb harmful subsidies and protect global fish stocks for all those who rely on it for their livelihood and food security, in a manner that also recognizes the needs of developing and least developed countries. Well, let's find out what this means to Nigeria and what benefits it could bring to the table, especially at this time when the country is looking for every available platform to bring in revenue. Well, to discuss this, we have Mr. Paul Chukwuyem, is Adjunct Anchor Trade Investment Competitiveness Policy Commission at the NESG, joins us from our Abuja studio. Thank you so much for your time, Mr. Chukwuyem.
Thank you so much, Minnie.
Yeah. So, first of all, we saw that as of 2018, the UNCTAD had held that 90% of the world's marine fish stocks are likely fully exploited, overexploited, or depleted. Now, this is worrying. I do know, like, in a country like Nigeria, we see a lot of visuals coming from the Niger Delta, what the crude oil activities is doing to the waters and the fishes. But I mean, up to 90% exploited, it is a major source of worry for a lot of people.
Yes, it is. Though I couldn't hear your last words, Ini, but I know you are tilting to. It's a very serious source of worry to Nigeria and to other developing countries in Africa, even within the ECOWAS region. So 90% of our fishery resources have been depleted. It's a very serious issue. And to make it very serious is the fact that this depletion has resulted from activities of thieves. I just say thieves, for instance, because there are individuals who come to our waters, to catch our fish, and then these guys have big trawlers. They have enough resources to mine our fish, and then sometimes they get away without being caught, And these individuals are the ones that have caused this huge depletion in the resources, in the fish resources in the region, especially in Nigeria. According to the Trawlers Association, there are about 200 trawlers, in Nigeria. These guys will go to the river, go to the ocean to catch fish, and they cannot get fish because some huge folks from Europe, from Asia, they're in our waters, harvesting this fish. Having the signing fishery agreement by Nigeria, it's a step in the right direction.
So where does this agreement come in helping with all of this? What benefits can accrue to the country, Nigeria, from this agreement signed?
Yes, there are several benefits that can accrue to the country for this agreement signed. One of them is that it will help us to reduce the loss we get from about $70 million is lost per annum from IEU. Unreported, irregular fishing. So the country loses so much money from this source. And then again, it will also help us to develop our fishery sectors, to have a sustainable fishery sector. Because if we do not have such sector, of course, we will not get the nutrition that comes from fishing. Because we know what fish does for our body. In fact, some persons even enjoy eating fish than meat. So if we allow these guys to come to our waters to catch fish, even without licenses, then it surely means that a lot of persons will not have the required fish. So it will affect our own food security in Nigeria, even within the region as well. So signing the agreement, of course, is the best that Nigeria has done, so to speak. Although there are also some other costs to it, because signing the agreement means that you will not give subsidies to your own fishermen. The developed countries now, it's agreed in the text of the agreement that they will not give subsidies to their fishermen. Because those subsidies are given them has enabled them to even come to our region to mine fish. So signing an agreement means that in the future, we as a country too will likely not give subsidies to our own fishermen. Subsidies can only be given on the ground that we want to regenerate the fish in our oceans or in our waters. To rebuild it, of course, you can give subsidies. But if you choose to also sign an agreement, it means that in the future, you won't give subsidies to your own fishermen. So that's the negative side of the agreement. But the beautiful side is, signing the agreement means that these big guys who come to our waters to catch fish, of course, they will have to reduce it.
Yeah, but signing the agreements, the uncountable agreements that Nigeria has signed to which we may not really be feeling the impact. So signing the agreement is one thing, but how active and regulated and intentional is Nigeria's fish sector? I don't know if you call it a sector or industry. How intentional are they? How much attention do they have? Who are the fishermen? How much interaction do they have with policymakers? I guess this is how it will trickle down. If not, it's just an agreement on paper that nothing will be done about.
Yeah, you are very correct, Idni. Well, we have the Federal Fisheries Department that is responsible for ensuring that the policies within the space is obeyed. It is up to the Fisheries Department to work with the fishermen to see that, you know, they seek out this agreement. And then again, we will encourage government that please call the state government meeting to involve the fishermen, ask them of the challenges they're passing through. You know, ask them of the problems and everything, so that, you know, so that they'll be able to, you know, be able to fish. Because this fish, this issue is so important to us. Now, let me give you some statistics here. Fish production in Nigeria is around, the share of fish production to total fish production in Africa, in just 6 regions, is around 10%. It's around 10%. And we can increase that, you know? And then again, our fish production is actually growing, but it should grow more than what we're seeing now. You know, so we're encouraging the government to please work with work with these stakeholders, several stakeholders, the fishermen, you know, owners of trawlers, help them to see how they can improve fish production. A lot of them don't even you know, are not able to fish. Do you understand? The agreement has made it possible that at least within 2 years before the agreement comes to life, you know, our government can support these fishermen. And it's possible, you know. So it depends on the government working together with fishermen to see that, yes, I mean, the agreements are implemented and whatever you have, whatever issues are settled. We know there's the voluntary fishing mechanism now. I mean, mechanism that the WTO has approved. Just within last week we what the new mechanism to support countries who are willing to implement the agreement. So the Nigerian government too, you know, can key into such funding mechanism to see how we can improve fishing within our region or in our country.
Yeah. So the report says that Nigeria loses about $70 million, you know, to illegal and unreported fishing and all of that. That gives us.
Hear you.
Can you hear me now?
I can hear you, Nee.
Okay, can you hear me now?
Yes, I can hear you now.
Okay, great. So I was saying that they say that Nigeria loses about $70 million to illegal fishing. So that gives us an idea of some potential. But how do we now balance that with the crude oil activities? Because a lot of the riverine areas in the Niger Delta, there's crude oil, and we see what happens to the waters there. How can the country balance these two activities?
Okay, so you mean the crude oil activities and the fishing activities? Can you repeat that again?
Yes, that's what I mean.
Okay, the crude oil and the fishing activities. Well, if we want to catch more fish, we have to reduce activities coming from crude oil activities. Because, of course, we know if you have oil spills, for instance, that affect our waters. You know, so I mean, the oil spill agency that we have should keep up. I mean, should work to the tax, because we cannot. The subsidy agreements as much as possible that these big guys cannot come in here to fish. You know, and then again, within our home, we also have problems, and the problem is we have, you know, spills. With spills, we can't produce fish. And you know how much this affects our rivers or our oceans. Because when we spill these things, we lose fish. And our fishermen cannot go to the rivers, to harvest fish. And even if they harvest dead fish, you and I know we can't eat dead fish. So the point is, we have to improve that end. We have to ensure that these spills are eliminated, and our fishermen can return to the rivers, to the oceans to fish. Without that, we cannot have sustainable fishing. So it is very important.
Chukwuem, thank you so much for your time this morning. Adjunct Anchor, Trade, Investment, Competitiveness, Policy Commission of the NESG. Thank you for your time.
Thank you so much, Annie.
All right. I don't know if Will has caught some fish, or she will allow the fishermen to catch the fish. But Will is here, she said.
There was no fish. It was a Red Sea yesterday.
Oh, no.
So the fishes were dead. I couldn't catch them. I mean, though I'm being optimistic, I'm wearing a green, so maybe...
You were hoping you could change something.
Yes, just by wearing this.
Well, there's nothing wrong with being optimistic.
Yes, it is. So I'm just hoping that today investors and traders are going to, turn back, because the market breadth was positive. So
I mean, your market has been on a bull run for days.
But I decided to catch the fish yesterday.
Oh, and you came late.
So, good morning. So we did see the market having its first decline yesterday, but we're going to start off with the fixed income market. There was bullish sentiments there. Still, yields are going down, so still no fishes to catch in that segment as well. We also saw muted sentiments in the NTB market. So much to do with probably the bond auction that happened on Monday. Investors are not probably buying a lot as they ought to. No, the buy interest is really low, but we have our analyst, Mr. Gafar Bashiru, is a senior associate, global markets with Parthian Partners. He's going to come in and tell us what's happening to the market. Good morning, Gafar.
Good morning. Good to be here on your show this morning.
Yes, the market was bullish yesterday. We know what that means for yields. Could you just tell us what happened, what the activities in the market is telling, the sentiments of investors currently in the market?
Okay, so in the fixed income market this week, we've had significant liquidity, right? On average, we've had liquidity stand at over 750 billion, right? And this is in comparison to last week where we had average liquidity at less than 250 billion. So you would expect that investors would seek attractive opportunities to put their funds in, right? And on the back of that, that's why we had a bullish session, especially in the bond market this week. Like you rightly mentioned earlier, in Treasury bills, the market has mostly been muted up until yesterday when we saw a rally, and which was skewed to long-end papers. We saw long-end papers open the day above 8%, but closed, settled just a little above 7% by close of market, and all of this is still majorly driven by significant liquidity. At the peak of liquidity this week, we had interbank liquidity at over 1 trillion naira. So you can expect, so you would imagine that investors will look to, like I said earlier, place their ID funds. Another factor that also drove demand this week was a circular that instructed or that abolished the price and floor ceilings that deposit money banks were guided by in the money market and the interbank Naira desk, right? So, and the implication of that is that we now have investors who would rather seek to place money in the interbank market at relatively higher yields or higher returns. Now, because rates depressed in the interbank market and Naira desk, we now have them channeling those funds to shorter papers, which is on Treasury bills, right? And also some Treasury bills rally yesterday. So that's what it's been like this week so far.
So with the introduction of the new papers on the bond, in the bond space, how is that? I see investors. Do you see investors eyeing those new papers, especially for the ones that are up to 2053, I believe?
Yes, we've seen particular interest in 2053's paper, and that's because this paper is issued in our current high interest rate environment or high yield environment. So the coupon on these papers is significant, closed at 15.7 at the auction, and you would expect portfolio managers are typically drawn to high coupon papers, right? So yes, we've seen investors show significant interest on these new papers, especially the 2050 is the longest yield paper. The demand we've also seen on this paper is driven by sentiments that investors in the market share. This new administration has given signal to the financial markets that we should anticipate a lower interest rate and effectively a lower yield environment going forward. And that's why we've continued to see demand in the fixed income markets recently.
You talked about the low yield environment. FAC is coming in, it's going to hit the market next week, probably. It was released yesterday. What's that outlook? What does that mean for the market? Can you give us some insights?
Yeah, that's further strengthens the bullish trend or the bullish sentiment that we've seen in the market, right? The fact that's to be disbursed by the 3 tiers of government stood at about 76 billion, which is the highest we've seen this year so far, right? So by the time we hit system, maybe early next week, we'll continue to see demand like we've seen this week on bond and treasury bill papers alike. With the suspension of the CBN governor, we've also seen we're beginning to see a change in monetary policy stance of the central bank, and what that means in this context is that we are seeing less aggressive or less significant discretionary CRR debits, and that also is another driver of demand in the markets because we're not seeing liquidity being mopped up as much as they used to be, right? And giving investors opportunity or more funds to play with in the market.
It's quite interesting. I was looking at the CBN special bills, if we could have that. Not much happening there. Is it related to the non-discretionary debit we're seeing now for CRL? Not a lot of action there.
Yeah, I mean, for demand or liquidity or volatility on special bill papers are usually seasonal by nature, right? Most of the volatility you see on special bill, that's seasonal by nature. Every once in a while, that's when you see special interest on them, and which is understandable given the fact that they're usually issued at near 0% levels to the banks, right? So there isn't much incentive for it to be traded all the time, right? So yeah, that's just how special bills typically trade in the market.
Okay, thank you so much, Gafar Bashir, Senior Associate, Global Markets, Parthian Partners, for joining us today.
Yeah, thank you.
So we'll look at the equities market. We did record that first decline for the week, 0.19%, to settle at 59,211 points. Market cap still sitting pretty at 32 trillion naira. And we do know that definitely that will bring a moderation to the year-to-date and the month-to-date returns. Now, looking at the volume yesterday, it dipped yesterday to settle at 615.91 million units, valued at 6.62 billion naira, and all transacted in 7,459 deals. Now, looking at sectoral performance yesterday, we did see mixed sentiments there, mixed performance for the sectors. Banking was down. Industrial goods was also down, but we did see consumer goods, the insurance and oil and gas sectors pumping up in yesterday's trading session, and that was really good. Top trades for yesterday, we did see Coronation Insurance topping that counter, 97.15 million units traded. UBA had 48.11 million units, and Universal Insurance had 43.41 insurance. Market breadth still positive, maybe slightly, 33 gainers, 31 losers. The losers are gaining grounds in the market, but we do hope that it doesn't get too bloody in the market. But you did see, for the NASD market, bullish sentiments there, 0.55% up, more than 0.5%. That's good for the market, 747 points, and still at the 1.03 trillion naira mark. And then we're seeing the volume traded yesterday was up, 14.83 million units traded, valued at 141.12 million naira. That's a good one for the market, and all in 20 deals. So the NASD markets were like opposite of what happened in the NGX market. We've seen that flip, and the investors are bullish on that stock. And we're looking at NASD now. It's quite we do say it's an opaque market, but it's not quite opaque. It's an understanding of the market will help investors maybe trade better and maybe, demand more stocks from the unlisted market than just going to the NGX.
Yeah, well, it might sound opaque, but 141.12 million Naira is not really that opaque. I'm trying to make a difference
in the market.
There's something your guest talked about that caught my attention. And we know that President Bola Tinubu had promised that he was going to lower interest rates.
Yes.
We know we've seen the market move to, first of all, the pronouncement of unification of FX, CBN actually implementing that. We did see the suspension of the CBN governor. All of this have moved the market, apart from subsidies, still moving the oil and gas. So I wonder what the president is thinking, or how is planning to use this lowering of interest rates
to get investors.
Exactly, but it's not going to be very good for the fixed income market.
Because we're not looking for hot money, because I think it's going to maybe curtail hot money, because investors, maybe foreign investors coming up because of high yields.
Because of high yields.
They will want to just
those are the portfolio investors.
So yes, but if there's low interest rate or normal interest rates running in the market, I don't think we're going to have that capital.
But anyway, the next MPC is next month. We'll see if they will reflect
that. In that.
When inflation is still surging.
When inflation is still surging.
Exactly.
Now, we did have that forecast for about 25%.
Yeah, yes.
We'll
considering what has happened this month.
Yes, alone.
All right, we'll see at 1:30 for Business Incorporated. All right, now, we're not going to London. We're going to Paris. Yeah, that's where Juliana is for the new Global Financial Pact Summit that has been on since yesterday. President Tinubu is there. And yesterday on our sister program, World Today, where Mr. Dele Alake was there to expatiate on some of the moves the president is making. We'll look forward to more of those and how they will implement it back in the country. But for now, Juliana has helped us arrange for a climate change activist. It's all about climate change there, climate financing and all of that. We have joining us Adenike Oladosu, a climate change activist, joining us from Paris to give us some of the conversations there. Good morning, Ms. Oladosu.
Hi, good morning. Thank you.
So how's it going there? We know you're all about climate change and financing and all of that, but a lot of African countries are not happy with the developed countries because I think about $100 billion or so that was promised, we haven't seen it. And yet, cutting down or working on our climate change is going to, disturb our economic activities. Fossil fuel, for one, is a major one. So what is new about the conversation on climate change?
Yeah, definitely. There are several new things or new development happening in the climate world. And so we just had the Bonn Climate Conference that happened in Germany a week ago, which is one of the most important summits that is going to shape the COP28 that is going to happen later this year in Emirates, in Dubai. At the same time, now we are having the new global climate finance. And I've been a Nigerian youth delegate on climate finance, and I've been following closely all of these climate-related issues. And currently in France, trying to see how world leaders want to agree, especially from developed country, because it talks about new global financing. And so I'm wondering how they want to synchronize those different financial commitments that they have made in order to say that we'll make this a reality and not just to come and talk, because vulnerable countries like ours in Nigeria have already been faced with this reality that climate change is no longer a threat. And so we need climate finance for just transition and for every other thing in adaptation, in dealing with the climate crisis in order to prevent more loss and damages.
So what are the practical steps that they are suggesting there for developing countries to adopt that, apart from the funding, maybe they give the funding, but what are some of those practical steps that, can be adopted actually to deal, because we do know, at least have an idea of some of the losses, both in finances and even in lives. Agricultural potentials are being eroded, the atmosphere, the environment, and all of that. What are some of the practical steps that are being discussed there that developing countries can adopt?
So I've heard from different world leaders, and to summarize it all, is the fact that they talked about debt swap, because many developing countries have a lot of debt to tackle or to deal with. And so we are talking about how do we swap the debt for the climate finance that we need, because I also heard from the president of Kenya on talking about the fact that it takes $5 billion annually to service their debt. And I think the same thing too, Nigeria has a similar scenario on debt servicing. And so they were talking about how do we reform our multilateral organization that will be flexible enough for us to be able to access this finance as quick as possible. We also heard from Pakistan, because last year they had the worst flood that hit their country. And so they're also talking about how do we access this finance. And so it's all about making this finance accessible and also challenging it to climate smart agriculture, to affordable renewable energy sources, and to different areas in our economies that we need a just transition in different areas. Looking at the fact that Nigeria have removed its subsidy, and so we have to start talking about how to make renewable energy affordable for everyone. And we also hear from Nigeria talking about capacity, that how do we build our capacity in order to adapt to these changes? And it boils down to climate adaptation in order to prevent to reduce or to prevent loss and damage from the climate crisis as it is right now. That Nigeria is not just faced with a single crisis, but we are faced with multiple crises from the climate crisis. And so everyone is talking about this. How do we synchronize this? How do we come into a concrete conclusion before we leave the summit today? And thereby we talk about how to go from there, from the summit that will be happening, the African Climate Summit that will be happening in Kenya this year in September.
All right, so finally, before we let you go and continue with the meeting, the conversation around carbon credits seems to be gaining grounds, especially around Africa. I think climate change activists like you are trying to sell that to make it attractive for corporates, individuals and companies to, buy into that. Do you have conversations around that going on there?
Yeah, it was also an ongoing discussion too at COP27, where we saw America pushing for it. And the same thing is also an ongoing conversation. It's a welcome development, carbon credits. But also we need not to forget the fact that we also need to transit as soon as possible. That in as much as we have carbon credit, we also need climate finance in order to deal with it, in order to make climate justice evenly distributed. That we need a just transition. We need to start investing on renewable, sustainable energy sources for us to be able to come out of the climate crisis. Because according to reports, most of the climate crisis that we have today, they are from the fossil fuel. But then Africa, Nigeria contributes the least to the global warming. So we expect that the developed country also find ways at which they could also help to make the financial commitment in transiting in as much as we have carbon credits. And another very important discussion that came out from yesterday's discussion was international taxation, which is a good move also. But we also have not to forget that we also need to transit a way to see how we could bring about more renewable energy sources and affordability in this renewable energy. We also need to talk about subsidies in the removal of renewable energy. Thank you.
All right. Yeah, thank you so much for all of that. Adenike Oladusu, feels like I'm there already. You've given me the lowdown. So I wish you the best in the rest of your conversations over there in Paris.
Thank you.
Now let's move over to crypto side. We seem to have spent some extra minutes there. We'll make the most of this. It's good news for crypto. We've seen Bitcoin hit 30 more than 30,000. And we see the market in greed. It's been 30 for like 2 days now. It was a surprising jump, at least for me, maybe because I don't have my eyes very close right then. But let's have Olumide Adesina. He has his eyes very close there to tell us how come Bitcoin has just gone there. Even started pulling back. But I mean, 30 was a surprise jump for me. Hi, Olumide. Good morning.
Yeah, good morning. Thanks for having me.
Yeah, I wasn't expecting Bitcoin to hit 30, but we see at 30, it's been 30 like 2 days or 3 days now. What's the major driver?
Well, the major driver is BlackRock and other institutional investors. You know, BlackRock is the world's biggest asset manager with over 8 trillion under asset management, mentioning the fact that they applied for a Bitcoin ETF on the spot side definitely triggered inflows. You know, usually when you are applying for such securities, you have to buy the underlying asset. So bookmakers had bet that definitely the world's largest asset manager would increase its Bitcoin stash prior to SEC's approval. And additionally, you know, that really dampened the negative attacks coming from regulatory agencies, particularly the Security Exchange Commission of Nigeria and of the United States. Sorry, and you know pretty much that the fact that Binance US and SEC United States also had some common ground that really moderated fear and concern. So it's not surprising to see Bitcoin hitting points at level not seen since last year. You know, pretty much one would be so surprised that in an hawkish environment where global central banks are increasing rates at astronomical level, Bitcoin is still moving at that level. It tells you 3 things. Yeah, first of all, some investors see Bitcoin as the edge against high inflation. A lot of people see Bitcoin more, are seeing Bitcoin more as an asset, and that's why Bitcoin is decoupling from the crypto market. If you look at the dominance level with other altcoins, it's approaching 50%, telling you that a lot of investors are keeping their eyes on Bitcoin.
Olumide, we really have to go, but I just need to get this in, please. So we see like a pullback beginning. Do we see it going down, or is this very temporal? Just very briefly, please.
Yeah, it's very tricky, but you know, Bitcoin yesterday it dropped below the 30, and now we came back. So the signs we were looking at is the 29,800 support level.
Okay.
A triggering down that side might go further down, but if it can stay support above 30, then we're looking at 35,000.
Wow, okay. So, okay, we'll see if we can jump in at this time. But thank you so much, Olumide Adesina, for your time and analysis this morning. Have a great weekend.
Yeah.
So that's it. So that's it for Business Morning. Thank you so much for being a part of it. Please always remember you can watch this program anytime you want when you go to Channels TV YouTube channel. It's always there, everything that we've done all through the months and years. But 1:30, Will Ibong will be here with update from the world of business. I'll see you at 10 p.m. for the stock market report. Ladi Williams will be here tomorrow, Saturday, 7 p.m. for more on the market. For now, take care of yourself, make some money. It's Friday, relax a bit.